Hello, Warriors. Bad close, short covering into NVIDIA. Could that be the reason for the pop today? What do you think, Mike? Steve? How are you, Warriors? AJ? Blake?
Morning, Coach.
How are you, buddy? All right. Bran, Kman, Ingmar, John, how are you?
Morning,
Hugo?
coach.
Hey, Kman, how are you? Bran,
Very well.
Laura? Okay. So we broke that trend line in the S&Ps, and that rally intraday, it rallied right back to it. So uh, I don't know what's going to happen today. I think you have to probably give the breakdown the benefit of the doubt, and this is what I'm talking about. So let's see, the end's making new highs, came in right about that, spot on about that. So here's the broken trend line. And then the relief rally we had so far, it just rallied back to the trend line. So I don't know what's going to save it. I think we'd have to get back over 72 or so. Um, Otherwise, we have to acknowledge it's a trend break. The daily certainly doesn't look good unless we turn it. So, it's all going to come down to big ends earnings, I think. So that's what's happening there. Uh, Came in
The
when
next
you look at,
24 hours, huh?
yeah, big 24-hour period. So this grinding pullback in
Mm.
euro keeps making me think I should be long here for another wave. What are you thinking in here with euro?
Dale, I am, but the smallest possible, just to have a chip on the table. I'm a bit long, but we are going to have to give that one room and time as well. Tomorrow is the big one there, I guess. But even tonight, well, later in your day. I don't know if NVIDIA can drag the whole market with it, including FX. I'm not too sure about FX, but it may have an impact in some form on the dollar, maybe. Um, I'm yeah, we are right halfway here of that little move that we saw back up from under 115 up to 116 and a half. That 116 50 60
Yeah,
is big on the top
yeah,
side.
yeah.
So it could again bang its head against it if we see a bit of a weaker data tomorrow or so. And by the way, it's not only the 50 and 100 DMA, it's also the bottom of the daily cloud on the euro dollar right there. And
Right
so
here,
it's
huh?
really a
Okay.
big level. So for as long as we're under there, we have to be a bit careful with longs euro, right? We could see a retest of 115 or so. I mean, just
Well,
not excluding it.
1550 is a big area.
Yeah, there's levels a bit everywhere there. 1540, 1560, 1550. Um, but
Okay.
I'm with you. I think it's not gonna need too much for the euro to become big again. Maybe the market is just waiting for what's to happen, tomorrow. Because you look at the bonds, they're well up to the tens. We're virtually at a standstill, right?
Yeah, we're
In
moving
yields. So,
sideways. Yeah, we're moving sideways here.
mm,
This big formation. Look at how the yield charts really kind of
flat, yeah.
flat and just like, gappy.
Well,
It doesn't
yeah.
seem, see, it looks like a penny stock. All
Well,
right,
yeah, but
that's
you
when
got
you pull up a you pull up illiquid
yeah,
markets.
but you're in a 15 BPs range, which is
Yeah.
easily done, right? One or the other asset manager, money manager, whatever, sovereign also needs to do something, reinvest or yeah, something coming to maturity. I mean, it's 10 pips, 10 BPs here and there. I think the move will probably, well, hopefully at least, start again tomorrow, right?
What is tomorrow that makes it a big day?
But the NFP, we have September NFPs.
On Thursday.
It's tomorrow is Thursday.
Tomorrow's Thursday.
Tomorrow is
Yeah,
Thursday. We've got it
yeah.
tomorrow, right?
Oh, okay, not on Friday, so they're
So I'm
releasing
hopeful.
it.
Yeah, I'm
Okay,
hopeful that that after that the bond market starts to move again, and then we will get a hopefully a bit more clarity.
okay. On the Dixie at 99.80, that was about 61.8 back of this. So we'll see. If we start getting back over 100,
Mm.
that's where this 50-day moving average comes in.
Yeah.
It's going to look pretty good if it clears 100.
For the moment,
Although,
it's helped by the smaller ones, the yen, the Swiss.
yeah, yeah,
Um,
this Euro Swiss exploded. You guys were talking about it the other day.
yeah, yeah.
That was
But
one heck of a move.
decent
Strong.
level coming up just above 93. I'm going to be a happy take profit seller if we get up there for a first round, and then we'll see what happens afterwards.
Okay, yeah, that's a nice trade. Nothing wrong with the 100 pips. It's better
Exactly.
than right. So gold, the metals are lit up here today, Kay. You were talking about the support being pretty good where we were at yesterday.
Yeah.
So, what do you do now? I mean,
Um,
is
well,
this a fade?
uh, I don't dare to fade it, and I'm going to give you just one reason I spoke about on the flow show, and it's somewhere maybe a bit. Some people may not agree with that, and it's just a thought. But imagine that dollar yen flies another 1 or 200 points, and Katayama goes very nervous and sends the BOJ to intervene. Is that not an extra bit under gold? Because that adds another leg of uncertainty into the market. And I was thinking like aloud this morning on the flow show, and I said like, well, I think if they intervene, gold flies another 50, $60 maybe. Yeah? And that could be the case, and that's the reason why I'm not really counter trading this. Um, yeah, I did pick up a little one yesterday and then sold it out this morning, and that's it. But yeah, this story again is crazy. The Katayama and Ueda had a meeting today. Nothing came out of it, but there was like this little line of interest that they say that they kept the whole arrangements between the Bank of Japan and BOJ, the one that they signed in 2013. Um, they kept it as is, but they may do a little tweak. So Ryan and I were head scratching this morning. What could the little tweak be? I don't know. I mean, increasing bond buying facilities, but they have already leeway in the Bank of Japan, forcing the Bank of Japan to give notification to the government before they hike. We don't know what the tweak may be, but at least when they came out of the meeting, dollar yen did another 40, 50 pips. Yeah.
Okay, so yeah, the only thing I could say is, you're shorting it into new high ground. You'd have
Mm,
to use a money stop, but it hasn't blown out the divergence on the 4 hour yet.
mm.
So I guess we'll see. I'm
Yeah,
trying to
anywhere
be.
between
I'm
156.70 and 157.15. I've got a next potential target. I'm getting a bit cautious. I'm at least until tomorrow, until I see those US data.
okay. Aussie is almost as weak as cable.
Yeah, because
Rallies keep failing. We
yeah,
take out this low. We talked about it yesterday. I think it was 64 was really the number, but we'll see.
did it again.
I
I mean, yeah,
yeah,
ping pong yo-yo between 64.60 and 65.20.25, but yeah, it's not as weak as, but the antipodians are not feeling too well. Our Kiwi as well is very weak, very weak.
and look at the euro yen blasting again. So Guppy new highs. So far the only one that hasn't made new highs is Aussie yen that
Yeah.
I follow. I mainly follow these three yen crosses.
Mm.
So um, what do you the euro yen? I know.
Well, I've taken my profits just below 180, and then
Yeah.
I mean, yeah,
You
just
can't
going at
expect
the end.
perfection. It's a winning trade, and you can't expect perfection at the crap table.
No, you can't expect perfection, but still, I mean, it does really seem that only interventions will stop the yen from weakening.
Yeah. So I was doing an interview, and someone asked me about this ratio. Um,
Uh-oh.
yeah, Bitcoin, gold. Look at that. So I don't know. There is a little divergence happening in Bitcoin, but Ethereum held up better, took it longer to make a new low after Bitcoin, and then on the bounce, it looked better too. So here's Bitcoin already giving back what it tried to recover yesterday, and there's Ethereum. So Ethereum just has a better looking structure. Not saying that we've bottomed yet, but it looks like we're bottoming. So even a new low won't confirm. I just Oil is down. It looked like it was going to head up.
Can't hold it. Can't
Yeah,
hold a bit. Cannot
yeah,
hold a bit.
yeah. It's like natural gas is, still in
Mm.
performing. Yeah, it sure looked like it was going to come out of the hole. So maybe
Well,
they
it doesn't
did.
it always in all of those moves.
Yeah,
It's
yeah,
virtually the same move. Tries to crawl out of the hole, as you say,
yeah,
and the next day it's getting a knock on the head again. I mean, yeah, I mean, this is not a market where I'm ready to catch a knife.
yeah. I wouldn't be chasing the metals on this rally because it is a possibility that we're going to double bottom here on the gold silver ratio. This is
Mm,
when the metals got slammed last week, right?
mm.
So this is with the metals recovering. So if we get a turn in the gold silver ratio, which it's trying to do here, we could expect what happened here again. So be careful about chasing any silver rally because maybe the XAU posts a higher low and gets going. We already have a little bit of a little negative candle. And I didn't do the fibs here, but I bet that's around 61.8 back. I bet
That's
Blake
very
knows.
volatile silver. Very
Uh,
volatile.
yeah,
Yesterday early morning sub 50, now above 52. That's
yeah,
4% in the turn. It's quite volatile.
yeah. Here's just to exemplify the 15-minute charts. We had lots of waves yesterday. A great market to surf. I don't know if you want to trade it, but you it's
Well,
enough waves
no,
to surf.
I actually kept it to gold, but silver did roughly the same thing what it did at 47 and a half. We had a look below, bit of a quick look below, and then bounced quite fiercely. And we did the same thing under 50. And we had a look below, was looking like it was going to fall out of bed, and here we are, nearly $3 higher from that low. So yeah, yeah, that's going
Uh,
to be the big one for today, Nvidia. I'll let Blake talk about that, and also you were showing the Bitcoin gold thing. I'm not an expert on Bitcoin by any means, so I'll leave that
yeah,
to the specialist too.
yeah. People are looking for ratios to go with. There's another ratio that could turn to that's really almost as extreme as the oil gold ratio, gold oil ratio. Like we were talking about, oil not being able to do anything. Oil is really cheap compared to gold. So here's NVIDIA. We all know the line in the sand here, held it again yesterday. So, I think it's inevitable that we're going to break down, which measures about 145, 150, something like that. So, but the question is if they could deliver even for a day or so, we could have another rally before it breaks down. That could save the market, but this is a pretty bearish look. I'd give it a 10% probability that in this cycle these highs are in until we see, I think, much lower numbers. So if they have good earnings and you like to hear the ice crack, fade them. if we get a lift, to 192, even to 200 would not change the picture. So I just kept half of my short semi position. I booked half yesterday, and I'll risk the other half into this earnings report. But the semis, it's not just Nvidia. Here's the stocks. Okay,
It's
I
what it
mean,
means to the entire market, Dale. It's the
yeah,
question is the entire ecosystem that's built around NVIDIA, like solely one company that is trying to be created, is it sustainable? My answer to that question would be no.
yeah,
So, but we're going to find out, on the earnings call today.
yeah.
So,
And here's the mags, right? So this was an important level. Broke down, checked it, and making new lows. But I would sell mags if we rally, $2, $3 in the next few days, right back up at resistance. So just like I wouldn't chase silver on this pop. I don't know about getting short down here in front of the Nvidia earnings. You could wreck your account on one number. It's like,
well,
it's like a Fed meeting. What's going to happen in the markets after Nvidia? Don't you
yeah,
think?
yeah, and remember, there's still a full day of trading between now and when earnings come out, but people got to tread, carefully at this point.
What's got your attention, boss?
A lot. So first of all, you guys were talking about, well, you guys have been talking about a lot. So let me go ahead and just show you something. So yesterday's low in the S&P was a Gartley. And if you guys didn't see the Gartley
Oh,
pattern, and which created the low,
I did.
yesterday,
Yeah.
that was, we were talking a lot about that, and we have a butterfly and a Gartley pattern. So the thing about Gartley patterns is when they're set up, they set up great. I mean, for reversals. So you can see intraday, we basically hit that, and then we bounced back to 6,600. So that was a, it was a really
Great
good
cover.
move. Yeah, it was a 100 point S&P, 100 point handle, move, which is good, right? Whoops, let me go
Do
back
they
to
leave long-lasting lows, Blake, when they complete, or do you just look
no,
for? Okay.
no, because if
I like
now
your
what
quick answers today.
yeah, well, that's because it's
Yeah.
definitively known now. If we break yesterday's lows, which would be the Gartley lows, we create a butterfly.
Oh,
So the
yeah.
butterfly takes us back down below 6,400. So then you got to think about what the implications of that are. So that, what's the implied volatility for Nvidia?
Seven.
It's yeah, 6 to 7% now. So
Yeah.
I think Bloomberg had it at 6.4% yesterday afternoon. I forget what the number, but it's somewhere around there. Let's just figure that out. So you got Nvidia, right? So let's pull up Nvidia, and you were talking about it just a bit ago. So let me pull up the stock. And you're right, Nvidia's got obviously very, very critical support. It's this trend line.
Yeah.
We knocked our head on it yesterday. It's still there. We're holding it. Now, you'll take, and I drew this out as a false breakout, which it is, but we don't need to pay attention to that right now. All right, let's say you have a 6% move lower, 6% move higher. So you're talking about a move below if the earnings are just unimpressive as far as the market's concerned.
Yeah.
We'll get a break of this trend line. Then we have major support. Major support is at the 164 level, basically 165. So where this purple line, you see it right here.
Yeah.
That is, in my opinion, it's major support because that's where you start creating lower lows if you break below it. Now that's far away from where we currently sit. That's not something that's going to be hit today after the market close, but maybe it will be. I mean, we'd have to have a 10% or more drop. And if we lose 10%, what does that equate to in the S&P? Probably somewhere in the 4 to 5% range. And the only reason why you have to use a range because you don't know if the market is selling Nvidia and selling everything else that has to do with Mag 7 or if it ends up being a more of a rotation conversation, which My opinion would be that it'd probably be more of a rotation. At least the initial response would be. How the market would react tomorrow probably has more to do with the jobs data and Nvidia. So if Nvidia is down, then the jobs, let's say the NFP is horrible. Let's just say, and even though it's September data, right, Kman? September. We're not getting October. We're
Yeah,
getting
correct.
September.
How
Yeah.
what's the market going to do with an old number like that, Blake? I mean,
Uh,
are they really going to give it a lot of credence when we're
I
30
think
days
so.
behind?
I think so because it's really showing us the beginnings of like the shutdown, right? So if
Okay.
the data was weak going into a shutdown, and then we know that the shutdown's not helping, it's good if anything is going to make things worse. I think traders will trade off of the September data.
Yeah, I think so too.
Yeah. So
And as I've been saying, it's one of the first numbers that money managers can stick into their models, right? So I
yeah.
expect moves in bond market and then triggering all the rest.
Yeah, exactly. So I wouldn't dismiss the data tomorrow. And so if you think about all of this, it really all hinges on everything that happens from today's close when Nvidia reports, and then going into tomorrow's news. Because look, I'm giving you the ugly look. Like, let's say Nvidia's earnings are they're fine, but they're below. The market has really high expectations. It doesn't matter. Jensen's going to get on there and be, happy-go-lucky and tell everybody that Nvidia is going to rule the world. Blah blah blah. Everybody already knows that, and that's the problem, right? So everybody's looking past his obvious enthusiasm, and we're getting to the point where the market needs to say, show me, because you've created, I say you, Nvidia has created an ecosystem that is more like a pyramid scheme that is reliant on each piece to continue to operate at maximum capacity. And if one of the pieces don't operate in this roundabout ecosystem that they have, between where they're licensing technology, where they're putting their investments, that reinvestment back in Nvidia, if that all doesn't cohesively work, then the whole scheme comes apart. And that's the
Yeah.
scary thing that I think the market has to come to grips with.
Yeah,
And
there was more circular investment deals yesterday with one company investing in NVIDIA and then NVIDIA will invest back into them. That's still going on.
yeah, yeah. So
Circular.
it's can the market is the market going to be convinced that this little pyramid scheme that we've got going on with Nvidia and the rest of the technology sector will continue? And
Yeah.
that's what it really boils down to. And I'm not an Nvidia analyst, and I'm not sure how everybody's going to take what Jensen has to say. But if he says one wrong thing, the market comes unglued, and then again you have to think, okay, will Nvidia spark a rotation into, okay, I'm selling Nvidia, I'm going to get rid of some of my Nvidia, I'm going to buy Kellogg's and Clorox and
Or
3M
Blake,
and
the Russell. It turned yesterday before the market turned and actually had a pretty good day. And
yeah.
it kind of led on the way down. It was showing a lot of weakness before they got to semis. And yesterday, with S&P's down 70 still,
It
Russell
looked
went
good.
positive. Yeah.
Yeah. Again, this is rotation, right? I
Yeah.
mean, the Russells come out of this ascending wedge, and we've been talking about this for a couple weeks, so it's obviously not looking great. But you're right, it's rotation, right? So that's one thing. What if it's we have the message from the market tomorrow that it is just get me the fudge sickle out of this place?
Yeah.
And that's when the dollar goes bid. That's when, bonds go bid. When yields drop and the dollar is rallying, you know that something's wrong. And those are the kind of cues that we'll be looking at in the Forex Analytics chat room. If you guys aren't in the chat room, and Well, this is actually the trades room. I actually just sold Canadian yen. Here, there's a freebie. You guys want to know a freebie from an hour ago or 30 minutes ago? I just sold the Canadian yen. Short. But if you want to have those types of conversations, you have to be in the Forex Analytics chat room because those are the types of things we'll be talking about tomorrow when it all unfolds, right? So these are really, really important topics that you can look at it on the face of everything and you can go, oh, okay, so I see that the Russell's turn, but what does that mean? Well, we are discussing those things right now, and those are the conversations we're going to be having. So, Dale, you asked me in a roundabout way, is there anything that sticks out like a sore thumb? Yeah, that it's all about NVIDIA today, and one of the other things I want to talk
Look at the
about this.
VIX when you have a chance. 23 was a breakout level for me. It's hanging around there now, but the VIX has been making higher lows even during successive higher highs in the S&Ps for a few months now. And
Yeah, it looks
this
like we're building a nice
23,
little base, right?
yeah,
It seemed when you do a rounded bottom like this, it seems like
yeah.
this is just around the corner, and I don't know how far around the corner that is, but when you have this base that's being built, it doesn't mean that we can't drift lower. Of course we can, but we start spiking above 30 again, and that's going to be we're in one of these, and this can be created right here from NVIDIA. Frankly, I'm not saying it's going to happen. But a real disappointing NVIDIA afternoon today could lead us to this environment in the next week or two.
We
Especially
have
in
Jim. Oh, sorry, go
oh
ahead, please.
no, yeah, you're right. You brought the VIXologist here. So
Yeah, so we
yeah,
have Jim Carroll to see what kind of clues he had and if he has any ideas about going forward here.
yeah, so it's gonna be a really interesting day today. And remember, people are nervous right now. I mean, like I pointed out with the S&P here. Yeah, there's your Gartley, and that was the
Yeah,
Gartley low. And we're gonna have this underside of this trend line probably be tested somewhere around this level, but we broke through the bull bear line that I've
yeah,
been talking about since the week ahead video last Friday,
yeah.
and we're below 660, which puts me in the bear camp. Right now, I am in the you got to sell risk stage. Obviously, things can change today after the Nvidia earnings. So, that's that today it's all about Nvidia. One of the other things that I do want to point out, these yen pairs, I know you guys were talking about them a little bit earlier, and I know I just tweeted about it. Just so you guys know, the euro yen hit the 127% extension of basically the 2024 previous range. We just hit the 127% extension. And the scary thing is, and I'm just going to say this out loud, not saying it's going to happen. It's just I need to voice how I feel here. When you're outside, Dale knows this better than anybody. When you're outside of a channel like this and you hit a key level of resistance that no one's really looking at, because most people
Yeah.
won't look back. They don't look back a year. They don't look. They're so focused on
No,
what's happening on the day or the last couple of days. Everybody's just looking at the euro yen as a big breakout. We
yeah,
hit a big resistance level. If we reverse here, like let's say, and I'm thinking worst case scenario, Nvidia's, down 5-7% post market. We have a shitty earnings. So the dollar yen or shitty earnings. Sorry, I'm shitty like jobs report tomorrow. Dollar
yeah.
yen comes under pressure. Yen catches a bid. Maybe there's more um, uh, talk from the BOJ, whatever the case may be. If the euro yen dips its head back below 180, then you're going to get that throw over that Dale
Yeah.
loves to talk about. We get back below 180, and then the euro yen shows a reversal. I'm not short the euro yen, but it's something I do keep an eye on just because we hit such a critical level today. It's not something I'm willing to step in front of just yet, but it's something that definitely is on my radar.
How's your Aussie yen chart look? Because
It's done just grinding. We're at
okay,
a 127% extension.
okay,
We're just kind of grinding higher. Kman knows this because I talk about it a lot. And anybody who's on our private shows, with the Morning Edge in like 45 minutes will know. I am not an Aussie bull. It's
Yeah,
scary to me that the Aussie is sitting on its 200
yeah,
DMA
yeah,
when stocks are at, at all-time highs, basically.
yeah,
If the Aussie gets below its 200 DMA, I think we're going to see the low 60s again. I
yeah. I'm
think
with
that
you on that.
this is very vulnerable here. We start clearing some of these support levels, and I think we trade back, lower anyway.
Yeah, yeah.
So
That'd be
just,
a hell of a
just
buying opportunity should that scenario play out.
I think so. I think
Yeah,
I think this is right here is like a what I like to call a generational low. I don't think that those lows will be seen for a long time. So yeah, if we get a dip like this, you got to be a buyer. You got to be a buyer somewhere down here. But I think it looks vulnerable and it looks scary. Like if you own the Aussie, it's scary. I mean, I even bought the Euro Aussie last night because I was so scared of it, and I mean I made a quick 80 pips last night after the wage price index number, but and already got out of it. Again, if you guys are in the trades room, you saw me get in at 11:26 a.m. long, and I got out at 9:12 p.m. So that was 10 hours later because I'm just so scared of the Aussie. I think it's just a short on rallies right now. So
good.
anyway,
Talking
um,
about my generation, the Who. So that was you could play that with
there
your
you go.
generational low. So
Hey,
um,
speaking of which, I know it's time for Jim, the Vixologist. So it's a great timing considering you're talking about the VIX. I want to thank Kman for being here because Ryan is on some other meetings, so he's kind of in the background doing some other administrative stuff for us.
he's
So
just
Kman,
planning his
thanks.
next vacation.
What's that?
He's planning his next vacation.
Yeah, might be. He does take holidays more than most.
Yeah, yeah,
So anyway, but thanks, K-Man, for all of your hard work as always.
yeah,
Steve,
buddy.
sorry didn't we get a chance to chat with you, but I've been talking to Steve for the last couple hours anyway. So Dale, I just want to pass it back over to you. Have a great
All
interview.
right, all right. Thank you, Blake. Thank you, K-Man.
Hey, have a good day and have a good interview.
All right, thank you. So, I'd rather talk to a vixologist any day over a proctologist. How about you guys?
Oh yes.
Anyone agree with me? So, okay.
Anybody over the age of 50 would definitely agree with you.
Okay, so let's talk about VIX. Jim, welcome
Hello,
back.
Coach.
Hey, buddy. So, you know, I was talking about, that we kept making higher lows in the VIX with successive new record highs in the S&Ps for months now, right? What did you see coming? Because, I saw a few of your tweets, and I think that your VIXometer was giving warning signals before the breakdown.
Yes, and yes,
Okay.
and it wasn't the only thing. So,
Okay.
um, can you see my
Yes, have the PowerPoint up there.
awesome? Okay, so I decided that this morning's Substack post at Vixology would be titled "Help Me, Obi-Wan,"
Yeah.
and we know that Obi-Wan is Jensen Huang from NVIDIA. Um,
Uh, okay.
because it just feels like we're kind of teetering on the edge, waiting to figure out which direction he's going to send us.
Yeah.
Um,
We
and
are.
yeah, it's this is a binary event from my perspective. There's been a lot of buildup. There's a lot of tension in the market. Uh, Quite a few things have turned bearish. So let me get to it.
Okay.
Disclaimer, disclaimer, disclaimer. Nothing I say means anything. I'm here to entertain you, and nothing is a recommendation to do anything. That's
Hey, Jim, when it comes to disclaimers and, you've, covered your regulatory obligations, but, I think they have these disclaimers backwards. I think past performance is more indicative of future results than not indicative of future results.
well,
Because
I think there's I think
don't you
there's
think?
something to be said there. Something to
Anyway,
be said there.
go ahead, buddy.
So, the last time I was on in late August, this is what my sort of my chronology of the S&P 500 and the VIX mix looked like. S&P was ticking new highs every few days or weeks,
Yeah.
and we had a lot of green shoots on the chart representing the readings of the VIX mix. We were bullish in late August, feeling pretty good. Let's just say that things have changed a little bit since then. Um, this is where we sit today as of yesterday's close.
Yeah.
The green shoots have largely disappeared. As we made the last set of fresh new highs, we did get a couple of green bars, but generally speaking, the volatility indicators that I gather together have suggested that people were not, fully bought into that move in the SPOOs, and have kind of been looking for this retracement that we've had. So it just has the tenor of the market has changed from the perspective of volatility. Help me, Obi-Wan. At yesterday's close, the VIX mix was at 9%. That's ugly. Again, if we go back to, even last week, we were north of 50%, but we have retreated. We retreated Thursday and Friday. We've retreated further yesterday or Monday and yesterday. So we're literally sitting on pins and needles waiting to see what the earnings for NVIDIA are going to be today.
Are you getting anything from like term structure or anything?
I'll get
backward
there.
dating? Okay.
I'm coming.
I'm still learning, Jim, I'm still learning to be patient.
Before we get there, one of the things, and I have, my followers on X and at Vixology are getting tired of seeing this chart. But I don't just look at equity markets for clues about equity markets.
Yeah.
And one of the things that has kept me on the right side of the trade historically has been paying attention to credit markets. And one of the places I watch very carefully is the high yield market, right? Because that's, the riskiest of the risk on pieces of the credit market. But, a simple measure looking at the performance of investment grade credit versus treasuries has also been a very valuable piece of information, a very valuable guide to, which side of the market you might want to be on. Obviously, corporate credit, is riskier than treasuries, and therefore, if corporate credit is outperforming treasuries, that's a sort of risk-on environment. And we saw that flip on October 31st of this year.
Well, Halloween.
And it has not gotten better since then. So if you had just said, gee, that's interesting, maybe it's a little blip similar to the one we got at the end of August or first part of September. You never know whether this is a one-off that's going to repair itself quickly as that one did. But this has been going on for several weeks now, and has been one of the things that we've been watching to suggest that this thing needs to repair itself, and if it can't repair itself, it's not a good sign for risk-on trades. However, you might want to structure risk-on in your portfolio.
Good point.
Back to the term structure. If we look at where the VIX futures were on October 31st, on Halloween, the green lines, so we had spot VIX, around about 17.5, and we had a term structure that had a healthy premium and was in contango. So this would have said, hey, things are okay on 1031. Um, yeah, that's changed a little bit since then. As of yesterday's close, VIX was up not quite to a 25 close. That kink between November and December is easily explained because the November contract goes off the board this morning.
Okay.
And so, with VIX going where it did, with spot VIX rising the way it did in the last couple of days, the November contract has to chase it. The correlation between spot and the front month just gets higher and higher as we approach expiration. So, what's interesting about this for me is notwithstanding what I refer to as the lift and separate that we've seen from Dece out to August, there's still a little bit of just a smidge of contango. So, people it's a mess, but people have not panicked at this stage. And again, I think that's tied to what happens whenever they cross the tape after the close today, the NVIDIA results. But it's certainly a very different picture than what we had, 2.5 weeks ago.
Yeah, yeah. The world changed.
Yeah. Another way that I look, it's kind of a shorthand or how do you take a signal out of that VIX futures term structure? And one of the ways that I look at that is to use a couple of ETFs that represent different spots on the term structure. VIX-M, a tradable ETF, is based on the medium term VIX futures. So, months 4 to 6, where VIXI and VXX, for that matter, use the front end of the term structure. So, I had a dream one night that said, what if you compare those two and see what it tells you? And what it tells you is that, when that ratio is rising, that is bullish. And when it's not rising, when it rolls over,
Yeah.
pay attention to,
Yeah.
and, this doesn't go back very far. But if you took this back farther, you'd find out that, this was a pretty useful tell at turning points in the equity market, going back as far as these two ETFs go back. The only place it didn't give you a clear heads up was the pandemic, but there weren't too many clear heads ups. Either you were nervous and got defensive or, you were surprised like everybody else.
You're like
But this,
Thomas Edison, man. You're like Thomas
there
Edison. Many of his inventions came to him in dreams.
you go.
Did you
No,
really
so,
dream about this, or were you kidding?
no.
You did?
Although once I figured it out, it's been a recurring dream.
Okay.
Um, if you look at the far right, you can see, okay, Jim, it doesn't always work. What about that October thing?
Yeah,
Nothing always works, but
nothing.
the way I frame it is, it doesn't mean you can't get an interruption in your trend. But again, if you look at the bottom panel, you see that long green line. If you were short volatility from the beginning of May into October, that was a good trade.
Yeah.
And having it turn red, it doesn't automatically mean you're going to stay red, but it means you better be paying attention, right?
Yeah.
Measure your
Something
risk.
shifting.
Yep.
Okay.
This is another look, at again, the same concept. And this is just, a simple swing trade framework, right? You take a security, you put a couple of moving averages on it, and when the moving averages cross over, that might be a trade. And, this is just using VIXI all by itself with 3 and 9 exponential moving averages and a crossover. And, gee, if you had bought FA.C.E every time that bottom panel turned green, you might have made a couple of bucks. Again, not a
Nice.
recommendation to use this as a system, but again, if you want to eyeball some things to give you a sense of what's going on through the lens of volatility in the VIX futures, this is one way that you could kind of keep track of which side you might want to be on.
And you use it on a daily chart, on a daily
This is a
basis.
daily, yeah, this is a daily chart.
Okay.
It's, you know, you could use it on, it's fractal in the sense that,
Right.
if you wanted to amp up the speed, you could go down to a, 130-minute chart or
Yeah.
I like the ones that are divisible that give me an even number of bars during the day, so 78 or 65 or, whatever. You
Interesting.
could dial it into your own time frame. And some people like simple moving averages, some people like exponential moving averages. Take your pick, find, you can find something that works for you. And but this is to me, this is simple and it's again, it's kind of a check on the weather. Um, if that thing is sloping down and the bottom panel is mostly red, then if you were brave, you could short this thing. And historically, that's worked pretty well with several punches in the
Yeah.
face along the way.
Yeah.
I'm not telling people how to trade. I'm just telling people how to get a view of what's going on.
Okay.
But at the same time, let's zoom out for a minute because I think sometimes we get in the weeds, we get maybe too close to the trees.
Yes.
SPX weekly, doesn't look too bad. We're still up near the top of a 3 ATR Keltner channel. It hasn't really broken down definitively at this stage. That may
Where's the bottom
change.
band? Where's the bottom band come in, Jim?
The bottom band, again, this is a 3 ATR Keltner channel. I
Okay.
kind of like Keltner channels. I use Bollinger Bands and Keltner channels. I kind of like Keltner channels because they use ATRs instead of standard deviations. And if you get outside of 3 ATRs, to me, you're kind of, it's the old saw. You can stay overbought for a long time, and this thing can
Right.
ride that channel for quite a while.
Yeah.
And when you poke through the bottom channel, you're probably hovering around some kind of bottom. Um, doesn't always have the V shape that some of the recent ones have had.
Right. Right.
But
So where's the bottom channel come in? Do you have a number on that?
hang on a second. I
Just as
can't quite.
ballpark.
Yeah, I can't quite see it, but
Yeah. It's okay then.
hang on, I'll tell you.
Oh, there's a persistent. Okay.
6,000.
All right. Like it. Thank you.
So, and looking at Qs the same way, Qs have pulled back a little more. We can zoom in a little.
ATR is average trading range.
Average true
RJP.
range.
True
Average
range.
true range. Yeah.
Yeah.
It basically, if you like Bollinger Bands use standard deviation calculated on close, and ATRs take gaps into effect. So it's just a slightly different volatility calculation that I find useful. So there's Qs, maybe
Yeah.
retracing more than SPYs, no surprise, given that
Yeah.
that the big cap techs have been leading the down, and this one's hovering, but right around 525 or so in terms of
Yeah.
that lower band. Um,
Okay.
so that's the perspective I've got right now, Coach.
Okay, buddy.
It
Well, good info.
I think we're at a pivotal moment for for these markets. You know, if you've been holding steady for a while, you know, there's no reason to freak out. But, you know, at the same time, given some of the things that I'm seeing, credit markets, the VIX futures,
Yeah.
the
Caution is
long haul ETFs, you know,
caution is warranted.
yeah, yeah.
Okay, so when you look at this whole picture, would you say that the credit market signal rollover is probably the most important thing because that's how everything can become unglued? And even the financial stocks, which were leaders to the upside during this advance from April, have taken hits and showing cracks like JPM, XLF,
Yeah.
even Goldman. So is that really the most important thing to pay attention to? What's happening in the
I'm
credit
paying,
market?
yeah, I'm paying very close attention to the credit markets. You know, I've got another uh, chart that I didn't include here, but I've posted a bunch of times that looks at essentially breadth data for the high yield market, advances and declines for high
Okay.
yield for public high yield bonds. You know, most people don't even realize that that data is published every day through FINRA. You can see which publicly traded high yield bonds, you know, how many of them went up versus how many of them went down. You know, so the same way you would look at market breadth for the equity market, you can look at market breadth for the high yield market. That has not um, reversed. That's been supportive since, you know, the taper tantrum or the tariff tantrum in April. It's stuttering right now. And
Okay.
so that's the other place, you know, so both the investment grade credit relative to treasuries and the internals of the high yield market are things I'm looking at. I've got good friends who are deep into private credit because obviously that's become a much bigger part of the landscape on fixed income. And they're watching things like, you know, PIK bonds and deferrals and, you know, and there certainly are, as Jamie Dimon says, there appear to be some cockroaches crawling out of that part of the credit market. So, you
Well,
know,
UBS shut their division down a week or
yeah,
so ago.
yeah. Yeah, and at the same time, you know, there are a bunch of people getting into it. I mean,
Yeah,
you know, Stevie Cohen says he's going to launch a private credit fund at 0.72. So,
yeah, he's
you know,
not a
what do
dumb
I
guy.
know? He's
Yeah,
not a dumb guy, you know.
yeah.
So,
Maybe so he could
uh,
short them all.
there's a
Yeah,
thought. There's a
yeah. So,
thought.
Jim, your work I think is outstanding for having clues of market direction, and you apply this knowledge with people's money you manage as an RIA.
Yes.
So, why don't you tell people how they could follow you, different venues?
Yeah. So, I can be reached by email, jim.carroll@ballastrockpw.com. Ballast Rock Private Wealth is the firm where I am a senior wealth advisor and portfolio manager. You can follow me on X at Vixologist, and you can also subscribe to my Substack, vixology.substack.com, and you won't have to pay a thing.
Okay, we're headed towards year end, about, a little over a month ago. Um, were most of the accounts that you managed, did you keep pace with the S&P?
You know, we run different strategies for different people, but we've made money across the board for people, and so generally
Okay,
speaking, you know, folks are happy.
all right, all right. Okay, so you have account minimums for managing?
Um, it is circumstantial. You know, we like to we 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 work primarily with high net worth individuals and families. So, um, you know,
Okay,
I would say that our minimum is really, you know, $1 million.
okay,
Um, and you know, we work with folks who also have a lot more than that.
yeah,
Um,
okay,
you know, we do a lot of work. We insist that people engage in a planning process. Um, you know, we want to make sure we understand their needs their objectives, their family situation, their long-term goals, and to engage in that process and do a great job. Um,
Yeah.
you know,
You're a fiduciary,
we're a
not a broker.
fiduciary, and it
Yeah.
makes more sense from our perspective, if we're working with people who are uh, serious about their investments.
Well, your content helps me, Jim. So I want to thank you for that, and thank you for coming in and teaching people about the VIX, which, I don't know, for a few years people have been saying it's broken. But, anyway, it's having a Lazarus here, so we'll see what happens. Do you think if we have, take a guess, say if we had the S&Ps trade down to, your lower band, 6,000, where do
Mhm.
you think the VIX will go to? 40, 50?
It could, Dale, and it becomes path dependent. If you remember 2022, right,
Yeah,
where we had the S&P decline, by a large number that year, but it did it kind of stair stepping,
right.
and as a result, volatility was relatively tame, relatively.
Yeah, that's true.
It's really, is there shock value in what happens in the market? Is there something that
It's
really
about the
deviates?
speed. It's about the
It
speed of the
it
move.
absolutely is. It's about the speed. It's about the shock value.
Yeah,
Um, I tell people that if you draw a line from lower left to upper right, a straight line, right, that has zero volatility. If you draw a straight line from upper left to lower right,
yeah.
that also has zero volatility. We know which one we want as a return profile, but the reality is that mathematically they both have zero volatility. So, it really is a function of, how disruptive that downturn is.
Do
And
you
and
do
the
you
ex
have your Jim, do you have your guitar handy?
uh,
Next
I can
time.
see it from here.
All right. Anyway, so yeah, I'd like to hear a few riffs from you someday after the interview. We could wrap it with that. Because I have a guy that comes on, he does Elvis Presley. It's this is kind of a Wall Street Week, American Idol
I,
combination show.
I,
So,
I, I will make a note of that for next time, Dale. Maybe I can change up the lyrics on a tune that everybody knows and bring it to the market.
all right, man. Well, Jim, thanks so much, buddy. Good hunting the rest of the year. I'll see you on X, and glad our paths crossed, and that you could come and teach people about an indicator that kind of gives tells if you pay attention to it. So,
There are a bunch of ways that people can and what I say to people is, look, I can't predict what's going to happen. Um, but I can try to position myself where whatever happens doesn't come as a shock, doesn't come as a big surprise. And to me,
yeah.
that's an important element of what we're trying to do is just, allow people to, not panic at the wrong moments.
It's probably never been more important, Jim, in the kind of the vibes that we have in the world right now. To
Yeah,
because
I look,
being surprised is kind becoming kind of a daily thing.
yeah,
Anyway, buddy, I
here, here.
appreciate, yeah, great interview. Jim Carroll, everybody, follow him at the minimum at Vixologist and learn about an indicator that is not broken, that gives you clues about market direction before the market knows. So that's a wrap, everyone. Don't just count your volatility, count your blessings, and we could stay peaceful even if the markets aren't. So you're welcome, Laura. People are thanking you, and now someone wants to sing "Stairway to Heaven" on the show, Jim. So
Well,
have a great.
that may be one of the only songs I will never perform.
Okay, everyone knows that one. Everyone, that's the song everyone wants to learn on the guitars first. But
Heard it too many times.
all right. I know you mean, bro. So that's a
All
wrap,
right, Coach.
everyone. All right, take it easy, Jim, and everyone who joined the team in 15 minutes. Get in the chat room and hang out with the people. Surround yourself with great traders, and you rise to their level. That's my belief, and I've seen it happen. You know why? It's happened to me. So, everyone, have a great day. See everyone tomorrow.